Hey traders, Nick Shaheen here looking at the financials. This is the XLF, and let me make sure to reset it to 1 year. It's a daily chart. Every candle is 1 day, 1 year's worth of action. So we're in the middle of a correction, obviously. The stock markets are in terrible shape as far as sentiment. We're still so close to the all-time high, so hey, how far did we fall? I don't know. If you stop the headlines, we won't fall at all. It's just the coverage is terrible, and it just creates crisis after crisis where there's no crisis. Anyway, back to the banks. The XLF, believe it or not, the biggest ticker in there is not a bank. It's Berkshire Hathaway. So 11% of it, I believe, is the Berkshire stock. So be careful when you say, okay, it's all banks. It's not. Anyway, luckily, since we have headlines, we can look at what's inside of it and trade that. And here are the components of it. This is one sure way to eliminate the noise. After all, the fundamentals have to prevail. So this is Berkshire, 12%. 11.5%, almost the same as JP Morgan. Bank of America is next. So just three names, three tickers are, 1/3 of it basically. Add Wells Fargo, wow, 6%. Citigroup only 5%. So you can see the big banks. Goldman Sachs is down here. So this is the XLF. So now we know what the XLF is. So here's my thought. Fundamentally, all these banks are cheap. For example, if I look at BAC, Bank of America, if we look in here, the PE is probably single digits or close to it. Yep, single digits. PE of 9.4. That's pretty darn cheap, but they've always been cheap. Price to sales under 3, price to book 1. So basically, if you liquidate the stock, you get, if they liquidate the company, you get your money back and a little bit extra. Citigroup is probably below that. JP Morgan is the most expensive of them, and by expensive I put that in quotes. PE is probably 14, 15. Oh, 11. And 3 times sales and 1.5 times the book value. So yeah, this is the best bank, and they only give it 1.5 times premium on the book value, which is pretty insane. Citigroup is probably below book value. Citigroup perception is that it's got outside exposure. So if something blows up, 9 PE, if something blows up, say in German banks, the perception is it's selling at 0.8, at 80% of its book value. So if they liquidate the stock of the company, you won't get your money back. So it's pretty strange, unusual situation. So how do I trade this stuff? Okay, so back to the XLF. From a trading perspective, just from a trading perspective, I'm going to mark it up. Looking at the chart. So we now know there is value. So the value is there. And when I'm catching a falling knife, this is a falling knife, I want to know if the value is there. And if it is, then okay, from the value perspective, I'm not making a big mistake. I eliminate that. So from a trading perspective, has this happened before? Yes, recently. About the same size. Has it happened before that? Yes, smaller. So the dips are getting a little bit bigger. Has it happened before on a bigger scale? Yes. Look at this. And this typical ABC 3 pushes, whatever you want to call them. They happen on the way up too. This way, that way, and this way. So I can say that there's support because it just happened. And here we are. More importantly, if I look left, this whole zone has been pivotal. I drew this red box before, and it's just below here. So there's definite support from the chart. Support is support until it's not. The bad thing about support is if it's broken, it carries lower. So my best guess is that we consolidate here somewhere, try to move up a little bit, and then if the bears want to continue hitting it, it'll do this. Okay? But they will need a reason. And right now, the bond market is in complete disarray. In fact, nobody knows what the heck's going on. Today, I saw moves that I've never seen before. The 30-year fixed had a mini crash. 30-year yield had a crash. Same with the 10-year. I mean, it went from 1.98 to 1.2, 1.16 in minutes, and then in minutes later recovered in a complete V. I've never seen this before. It may have happened. I don't usually watch it that closely, but since it was in the news, I was like, what the heck is going on? So we don't know what's going on. So could they get cheaper, the banks? Yes. So this is the worst case scenario. But what if this support holds? Then they will start mounting an effort up. So from that perspective, this level right here, this is 1 year worth of action. 26.5 is the point of control from the volume profile. This is where bulls and bears have fought it out the longest, the hardest. Not the longest, the hardest. So this is where it failed to be support as a line, but we're still in the same zone. So if you consider support as a rubber band, so it hit the rubber band and it's extended a little bit lower, maybe it comes back. This is the rebound from last time. I don't know what the heck happened before and why this happened, but I'm just saying support is support until it fails. So when do I bug out? If I take a long in XLF right now, I'll put a bug out below the low of today, 25.9. But that's me. Somebody else may say, you know what, I don't care if they drop it. I believe in it long term. So it all depends what I'm doing. If I'm buying, I can go along the XLF by buying it. But then again, this is a boring ticker. I can choose banks within it. Or I can buy some calls, and if I do, I make them long dated so I don't have to sweat it short term. Or I can sell some puts or put spreads below it if I know options. So what about the banks in it? I mentioned Bank of America. So Bank of America should not have outside stuff on its books. And it's acting horrible. In fact, it lost its support. This one. Or in the process of losing it. So why are we going to the Christmas lows? That's the question. So if I were to sell puts, unless somebody knows something I don't, I would probably choose Bank of America over the XLF. That would be my guess on this one. If I wanted to buy the shares, this has good place as any to nibble. There's no emphatic moves right now. We are in headline mode. Nothing is control of anything. When the TLT is doing this, we don't know what the heck's going on. When the TNX, the 10-year yield, is doing this, we don't know what's going on. When the TYX, which is the 30-year yield, as low as ever been, we don't know what's going on. If you lend the government money, they only pay you below 2. Today it was as low as 1.918. So that's the point I'm saying. We don't know. I don't know. So I have no conviction in saying that this is the bottom. I'm just saying where the bottom has been recently. So this is the Bank of America. JP Morgan gets the benefit of the doubt. Looks exactly like the XLF. So I don't need to say what I said for the XLF because it applies here exactly. In fact, watch this. Chart almost never doesn't move. Same thing. All right, so what about Citigroup? Probably not as pretty close. So Citigroup still close to its support here and here. So like Bank of America is not as happy and not as emphatic bounce, but also could be tradable because it's pretty cheap, but we don't know what's hiding. Wells Fargo would not be my choice just because it has hair on it. What does that mean? They have their own issues. They've cheated before. They've lied before. I'm not saying they're liars. I'm just saying, why bother? I've got hard enough time battling the good banks, let alone one that has its own issues. So definitely not catching this falling knife. Who else? Oh, Goldman. So this is not a typical bank, not a money center, but look how much higher than its low. It too has good kudos on Wall Street. Surprise, surprise. And it's exactly at its point of control. That yellow line that goes across. This is the yearly point of control. This is a daily chart still. I haven't gone in a different time frame yet. So from the daily chart, 208, 206, 207, it's a moving target, is a line the bulls, onus is on the bulls to beat it. Okay, now they're trying to hold support, but it's a different story to actually trigger a long, meaning the bounces are sales until they close above that area. And it's a moving target, so you got to just do your homework on that one. So is this a good one, a good knife to catch? I don't know the value of it. Let's double check it. So it's a high ticket as far as the price, but it's not expensive. It's 9 PE. Wow, that's pretty cheap. I haven't looked at it in a long time. 1.4 times sales, but then again, this is got a trading element in there, and it's trading below book. I don't track it, but I bet you it doesn't trade below book a lot or long. So this is a candidate, but this one is a, they do trade, or at least they used to. I don't know now. So there's that element in it. Not as bad as Wells Fargo, but it's definitely better action than the XLF with regards to its last low. So this will be a candidate of knives to catch. Again, I would rather sell puts or put spreads than buy calls and hope. Otherwise, I would buy the ticker itself, the stock, and hold it. This way, over the long term, it's not likely to be a catastrophe unless we get a black swan, which is true at any point in time. So it's not a trading thesis. So this is Goldman Sachs. I think Morgan Stanley would be in there. Yeah, I'm not going to even bother with that one. So again, the point of this video is, are the banks cheap? Can they go lower? Yes, they're cheap. Can they go lower? Yes, but they're at support. So if the headlines are flying, I can eliminate the headlines, or at least get some more intelligence from the charts themselves, and I do have some stuff to trade. The XLF is at support, but it's ginger, and I'd rather not buy upside hopium. But if I do want to catch the falling knife, I'd rather, I'm summarizing in case you didn't notice, do it via Bank of America, JP Morgan, Goldman Sachs. I think those were the three. Citigroup, maybe, but you get that extra element from overseas. Definitely not Wells Fargo. Not for me. Nothing against the company. So hopefully this provides a little clarity on charts and trying to avoid the stinking headlines. I mean, the headlines are there. We can't avoid them. All right, next signing out.